Lululemon. You know the name, you see the logo pretty much everywhere. But behind those iconic leggings, there's a business story that's gone from a Wall Street favorite to a company in, well, a bit of a crisis. So what on earth happened to the brand that once seemed like it just could not lose? Let's break down the anatomy of this potential turnaround. 48%. That's how much Lululemon's stock value just, poof, evaporated in 2025 alone. I mean, that is a truly staggering number for a brand that, for the longest time, seemed completely invincible. And this chart right here, it just illustrates the problem perfectly. See that dotted line at the top? That's the S&P 500, the overall market, just chugging along. And that line at the very bottom, in an absolute free fall? Yeah, that's Lululemon. This wasn't just a bad year. This was a sign of a really deep crisis brewing right under the surface. Okay, so to really understand this story, we're going to trace the path from crisis to a potential comeback. We'll start with that massive crash in 2025, then dig into the financial squeeze that was causing it. From there, we'll tackle the biggest question of all. Has Lululemon lost its cool? Then we'll unpack their turnaround playbook, and finally explore what the future might actually hold. All right, let's dive into part one, the 2025 crash. The key thing to get here is that the stock price going down wasn't really the disease itself. It was more like a symptom of much deeper problems with stagnation inside the brand. So this slide really summarizes the perfect storm Lululemon was facing. You've got that massive stock drop, a valuation hitting historic lows, which basically means investors had lost faith, and then on top of all that, a governance crisis with infighting in the boardroom. It was a multi-front battle for sure. And that external crisis was mirrored by some big problems inside the company's financials. Which brings us right to our second point, squeezing the profit. To put it simply, their growth was becoming incredibly expensive to achieve. And the numbers? Well, they don't lie. Just look at these key metrics from the third quarter of 2025. Gross margin, that's the profit on each item they sell, was shrinking. U.S. comp sales, which is a critical measure of a store's health, were down 5% in their single most important market. And operating margin, a measure of their overall profitability, was down even more. The whole business engine was just sputtering. So what was causing this squeeze? Well, a huge part of it was external forces. As this quote points out, management was basically bracing for things to get even worse, with new tariffs on goods just driving up their costs. We're talking about a 400 basis point hit from tariffs alone. That's a massive, unavoidable headwind. This chart really shows a company living a double life. In the Americas, its home turf and biggest market, sales were actually shrinking. But then you look over at China, up a staggering 46%. This created a really dangerous dependency on international growth to mask some serious problems back at home. But financials are only part of the story. And this brings us to maybe the most important and least tangible factor, the question of cool. Beyond the numbers, Lululemon was facing a battle for its very identity. So let's just ask it directly. Has Lululemon lost its cool factor here in the United States? This is the kind of question that keeps executives and definitely investors up at night. And we've actually got data to back this up. A deep dive into social media sentiment in 2025 found that over a quarter of all mentions of the brand were negative. Only 9% were positive. Now, for a premium, aspirational brand like this one, having nearly 3 times more negative buzz than positive, that is a major red flag. And the competition was successfully reframing the whole narrative. While Lululemon was being called dated or what everyone wears, you had these newer brands like Alo and Vori just capturing that quiet luxury vibe. They were seen as more current, and they were resonating way more strongly with younger, trend-setting consumers. And to put a really fine point on it, a consumer sentiment report was unambiguous. The perception that the brand had lost its cool was a dominant driver of those negative feelings. So the company knew it had a massive problem. The question was, what did they decide to do about it? So, with the problems clearly identified, the company moved to stop the bleeding. This brings us to Section 4, the turnaround playbook, which features a brand new leader and a whole new plan. The first, and you could argue most important step, was a change at the very top. In April of 2026, Lululemon brought in an outsider, a real heavy hitter from Nike named Heidi O'Neill, to take over as the new CEO. And analysts saw this as the critical first move. But here's the twist. The market hated it. The stock plunged 12% on the announcement. Investors were just deeply skeptical that one person, even someone from Nike, could fix such deep-seated issues. It was a really clear signal from investors that one star executive just wasn't enough to guarantee a fix. So, what is the new CEO's plan? Well, management laid out this three-pillar strategy. First, product creation, which just means more innovation and newness. Second, product activation, which is really just a fancy way of saying better marketing and in-store experiences. And third, enterprise efficiency, to get a handle on those rising costs we talked about earlier. Now, while they work on fixing the US, they are leaning heavily on what's working. And that's international growth. That 46% jump in China is the engine, and they're expanding aggressively into new markets like Mexico. It's a classic strategy, right? Use your strengths to buy yourself some time to fix your weaknesses. And all of this leads to the final, critical question. What happens next? With so many moving parts, the future is anything but certain, and analysts have mapped out three very different possibilities. So, really, what are the possible futures for Lululemon as we look through the rest of 2026 and beyond? This slide shows what's called a recovery matrix. Analysts have broken down the future into three main scenarios, each with its own probability. A bull case where everything goes right, a base case, which is kind of a slow grind, and a bear case where things get even worse. Okay, so in the bull case, the optimist's view, the new CEO works some magic, product innovation really hits, and the stock could recover to around $320. But on the flip side, in the bear case, the turnaround fails, the brand continues to lose share to its competitors, and the stock could just languish around $160, becoming a classic value trap. What all this means is that Lululemon is no longer a safe, sleepy investment. Analysts are now calling it the sprinter, a high-risk, high-reward play. Its future isn't about slow, steady growth anymore. It's about a rapid recovery that's driven almost entirely by the success of its new CEO. So, ultimately, it all comes down to this one massive question. Can a single new leader, no matter how talented, truly reignite a global brand's cool factor and fix its most important market? The answer to that is going to define Lululemon's next chapter.